Hello, everyone, and welcome to this edition of Investing and Trading Live. My name is Josh Locust. Today is the first trading day of the week. It is September 18th. It is Monday. Now, we didn't get a market overview last week, so the market is open now. It is currently 8:53 in the a.m. Central Time Zone. So what we're going to do here today, we're going to do a few things. One, we're going to do a market update, as always. We're going to go over the major markets. As in the title, markets are slumping at the open, ever so slightly, but a rough day on Friday with especially the S&P 500. Same thing with the Dow and the NASDAQ. But we're going to cover those major markets. We're going to look at some opportunities with SLV that's coming near our demand zone. Crypto is pumping a little bit, so crypto's looking pretty good. But Tesla and Target sliding here, and We've been talking and waiting for Target to continue to go down. We've been kind of hoping for that to continue to go down so we have an opportunity to potentially go long at one point. So let's get into our market update. Before we do that, this is for entertainment purposes only. We're not giving any recommendations. This is mainly for my entertainment, but hopefully you find it entertaining as well. So that being said, let's get into the S&P 500. We look at the SPY for the overall market gauge. And the market, especially like I mentioned on Friday, showing a major drop from 447 down to 443 on Friday. And markets open ever so slightly down. So they gap down just slightly on the day on Monday here. Currently at 442.82 and showing some weakness. So we actually are in a 1 hour demand zone that has been tested before. We put this demand zone on, I believe it was around the 6th of September. It tested that demand zone, so it did exactly what we were hoping to on the 7th and went and did about a 2.5 to 1. Now we're back down in that same price level. So I look to see some more buying pressure out of this, but this is a 1 hour zone, not as strong as our weekly or 4 hours and dailies. Ultimately, I do like the daily zone that we identified many weeks ago at 429, 424 area, right around that area. So currently S&P 500 showing some weakness, but in a short-term demand zone and sideways on the midterm. So we are probably going to see some sideways action here for probably a couple days. That's my thought on that anyway, so be prepared for that. The Dow Jones currently at 345.50. And this one a little bit weaker, made a big drop on Friday, just like the S&P 500, but a little weaker on the day, currently down 64 cents, which is 0.18%. The S&P 500 is only down 0.12%, so not quite as much. But this one did not gap down, but it's been weak ever since. It's currently at the low, right at the low of the day. No major current supplier demand with the Dow Jones. The Qs, which is the NASDAQ, not really in any major supplier demand areas. We do have a slight demand zone on a 4 hour chart near the 366 to 364 area. So I'll see this continue to slide here. This one actually stronger on the day. It gapped down much lower on the day, but actually showing strength, so that these major markets aren't really correlating like you'd think they should. So like I said, we have that demand zone on the 4 hour chart. Nothing major on the daily chart. I haven't looked at a weekly chart or anything. As a matter of fact, I have a 4 hour chart here. Let's fix that and go to a daily. No, we got to fix that here. We're going to go back to our 4 hour chart on this one here, and we have our daily chart here. So yeah, no major demand or supply near current price on a daily. So we'll look to see what happens when this 4 hour chart gets down to the 366 area. That is your NASDAQ. Your IWM currently at 182.97. Same story, dropped on Friday. Pretty good, and much weaker here today. Actually, probably the weakest of all, down 0.39% on the day so far. So this one's showing the most weakness. As far as supply and demand zones, nothing to really note of, but we are getting near the lows, the pivot low near 181.50 area. So be careful as it gets to that pivot low. If we see that drop there, we're probably going to probably to see some more continuing downward pressure. It's tested twice off the demand at around 181, so we'll see if if that holds again. It probably will go further into it, but only time will tell on that. So that is your ETF major market update. Now, any other major movers other than anything else is XLB, which is materials, up about 1%. XLU, which is utilities, down 1%, and utilities down 1.4%. So we'll continue to monitor these. These were actually have a pivot high, started an uptrend. So we'll see if that's just a retracement to a shorter term demand zone, which could be potentially down all the way down to $61. So might see a little retracement here. SLV, I mentioned that in the title. SLV getting near our daily demand zone. We've been waiting for this daily demand zone down about $20 or so. And volatility still is low, not really giving much of premium on SLV. That being said, it is close to 1%. If you are feeling froggy, there's an opportunity there to get close to 1%. If you want to, really especially if you want to be able to own SLV at $20 per share. I do like that one, but there is a couple supply and demand zones. We are at our 889 moving average crossover. It's a little odds enhancer that we use to see if there's an opportunity near that. So we looked at that on a daily chart, and let's just go down to a 4-hour just for giggles. And we do have that same demand zone at that 4 hours. So I'm liking this demand zone around 2117 to 1966. Not the year 1966, but price 1966. So if you are willing to own SLV, which is silver, the silver ETF at $20, there's a strike at 20, not giving 1%, but it's getting close to it. So it's an opportunity to get paid especially if you wanted to get into price anyway. Also, if you wanted to buy some calls right there at $20, be about $1.34 and the spread, so $1.35. So you'll be able to get into own 100 shares for $135. So pretty cheap there, rather than buying the shares outright. You can do the option there. And the delta on that is about 76 cents, so that's not too bad. Typically you want to be above 50 at least, minimum. So there you have it. If you're looking at doing anything there, there's some opportunities there. Put your own risk on that. This is not a recommendation. Strictly, as always, strictly entertainment only. All right, so that is your silver ETF. USO oil is continuing to show some strength. It gapped up again while our gas prices are going to probably continue to go up here, which is not good. Unless you are long this, then you are probably feeling pretty good, especially if you got in down around the 60 or 50 or even 40 area. Did some options on that, looks like on my chart here, back in November at the probably the 45 strike or 46 strike. It's too bad it didn't get me in, because I'd be looking pretty good right now. Although that's a strategy that I like to do, and it's a very conservative strategy, which I like to have. And there you have it. All right, that is USO. Crypto, as I mentioned in the title, looking pretty good on the day, up about 2.8%. On the day. Currently, the Bitcoin market is at 27,295 even. So we are out of that little range. I'm looking to have that break above the 28,135 mark to be able to get up a little bit further. So Bitcoin looking pretty good. HNT also up $143 per HNT, which is helium. Now let's get into some stocks here. A couple I wanted to note. One being Target, currently down almost 3% on the day. Now let's just go to Target. It is low on the Bollinger Band, which is exactly what we're looking for in our strategy to maybe sell some puts on it, although volatility is super low. Volatility, probably not giving any premium, but let's just look anyway. But that being said, if you're looking to buy some calls on it, well, there you have it. They're probably going to be a little bit cheaper. So Target, let's first off, oh, by the way, I was looking at the 35 days or 32 days on SLV, which is very short when you're buying calls. So let's look at the 32 days for Target. And we're going to get on, because I do like that price at 112 to 100. So there's probably a 100 strike. Actually, there's not. It's a 109 strike. That is not giving a percent. It's about a 0.5%. Which, that's a long ways to get back down, there. Actually, might 109. I'm sorry, we want to be at 100. The 100 strike. There we go. Just got to drop 16%. The 100 strikes aren't giving anything, so that was my mistake. 100 strike is not giving anything, which is where you'd want to be below your demand zone when you're selling puts. But let's look at the calls. Let's look at, say, the 90-day calls. Well, let's look at 123 just for giggles. Current price at 119. Pretty expensive, if you ask me. Deltas are okay. So you're gonna pay about $1,000, just over $1,000 per contract to get into the 115s, which is much cheaper than buying it outright. Buying 100 shares at 100 so basically, here's the equivalent. I'm just going to explain the equivalent. If you buy one contract of Target, which is 1090 times 100, you're paying $1,090 per share. If you want to buy 100 shares at $115, you are going to tie up $11,500. So your rate of return is much better with the options market than just buying the stock, really the stock outright. So that's just an example there. So do what you want there, but that's just what the equivalent will look like. So that is Target currently at $119 even. And I do like the 100, but pretty expensive to buy the 100s right now. You wouldn't want to buy them right now anyways. But selling them, not giving enough premium. That is Target. Oh, Tesla. I wanted to look at Tesla. That was down pretty bigly today as well. Tesla currently down 3%. A big drop on Tesla the last 2 days, really since Friday or Thursday. Gapped up, and we're down about almost 4.5% almost with Tesla. So, struggling there. There is some shorter-term demand zones, mid-term and longer-term demand zones, but it's got a ways to go to get down there. So, 265.89 currently. There was one more I wanted to look at. I think we looked at them all. Let's see. American Airlines. Oh, American Airlines is low on the percent Bollinger Bands. Let's see if it's giving any premium. Probably not, but let's look anyway. Well, it's got at a 3 for a volatility. I said volatility. I was on a TV program one time in Colorado on the Fox station, and she said, "What about the volatility?" And I was like, "Volatility? volatility. Anyway, I thought that was funny. So, the 12.5s. Are giving you 1%, just over 1%. Let's see here. American Airlines, let's look for some demand zones. I don't know if there is. We are near a pivot, so I would say the 12.5s. The downfall is it's only got to drop 4%, which it can do, no problem. It's dropped 4% in the last couple days. And it's been stuck at that low on the percent Bollinger Band for quite some time. And this actually will do that. I'm seeing airlines continue to go down because of oil prices most likely, but let's go look at oil and see if there's any correlation. If there's any supply zones overhead with oil, well, then we can increase our odds and see if this is an opportunity. We'll look at the daily. We are near a pivot high. I don't see any major demand zones on a daily chart. Let's just peek at a 4-hour just for giggles and see if we have anything there. Although we are in near a 4-hour, kind of a sloppy one, but it is a 4-hour supply zone, which I kind of like here. Currently in it right now. It didn't pop right off of it straight down, so that worries me a little bit. So it's eating up orders, but there's an opportunity. American Airlines, 25 days. See if there's any other ones below it. There is some 32 days, and the 12s are giving you 1%. And there you have it. Might be an opportunity there. It's nice to look at different correlations, and this is just an opinion, which I don't like to use my opinions in the market, but yet then again, it is still there. All right, well, that's your market update for the day. We'll do another show tomorrow, probably the open. We'll catch the movers, the losers of today, and see what happened and look at opportunities tomorrow. We'll peek at some more option strategies. I'll peek at them today and see if I can find some opportunities, and we'll cover that tomorrow. As always, collect your profits when they're shown to you, and protect your losses when they are small and keep them small. Until next time, retire young, my friends.